Hi, folks. This is Daniela Cambone for StansberryInvestor.com. And before we start today's show, I just want to draw your attention to a new report Stansberry Research has put out that I think you should really be taking a look at here. Because with most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the system in the past 18 months, it's particularly a good read at this moment in time. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends you take immediately. You simply have to go to wakeupcall2021.com to get a free copy of this report. Again, it's wakeupcall2021.com. It's a free report. I urge you all to check it out. All right, that said, let's get to our show today where we are talking uranium prices, which have been on a tear. So please welcome to the show, Amir Adnani. He is the founder and CEO of Uranium Energy. He's also the chairman of Uranium Royalty. Amir, welcome to StansberryInvestor.com. Good to see you again.
It's my pleasure to connect to talk about the uranium.
Yes, we go way back. We've spoken about gold in the past, but today our focus is uranium, Amir. And the metal here up 45% the last month alone. What's behind the surge?
You know, first of all, you got to remember that we had a decade-long bear market in uranium.
Oh, yes.
And so you basically go through a period like that and you consume more uranium than what you produce as an industry worldwide. And there was maybe a debate about what kind of role nuclear energy would play in the energy mix moving forward. And in the last year, we've seen this incredible conclusion that decarbonization, electrification, and the need to really address the issues with air and air quality and what's happening to our planet must include nuclear power in the energy mix alongside renewables, and there's just no question about it anymore. So you got billionaires like Bill Gates who are committing their own capital to build a new nuclear reactor. He's doing that in the state of Wyoming. You're seeing pledges by governments from the United States to China about net zero. And net zero is about reducing our emissions, reducing global temperatures. And we can't do it without nuclear power. So because of that, from a policy point of view, nuclear power is now enjoying bipartisan support in the US and being embraced around the world. And all of this just means more demand for uranium. And the world's waking up saying, and just last week, the World Nuclear Association talked about the need to have to double uranium development to keep up with the pace of anticipated demand. And everyone's now saying now there's we go from having a uranium market that people thought was oversupplied and the price of uranium wasn't doing anything. Right. And now there's all of a sudden a supply crisis. There's not enough uranium and the price is up, as you mentioned, 45% over the last month. Right. And look, there is a driver here. Our mutual good friend, Rick Rule, and the Sprott organization,
I was going to say,
have launched something that, and I'll stop there, but there's a bit of catalyst in this move, but I just want to make sure people understand it. There's a bigger picture that has taken many years to develop that provides the more fundamental setup for this move.
Right. Well, I want to talk about Sprott, but I think uranium is one of those commodities that has a lot of politics tied to it. I know you've made a lot of trips to Washington to speak with policymakers surrounding uranium. So if it's going to be used for a greener future, tell us about what it takes to mine uranium, because people would say, well, look what we need to do to do. Are we hurting the environment, basically mining the uranium to try and solve the problem of trying to help the planet?
The most, let's say, low cost and actually environmentally friendly way of mining uranium is a method that's not used nearly as much in other commodities. That's a method of in situ recovery or solution mining. It is environmentally benign in the sense that conventional mining that involves stripping and it's an earth moving exercise is something that typically does have concerns around it, because you have a much bigger footprint. With in-situ recovery, because certain uranium deposits can be recovered in solution, the footprint is very small, the impact is very little, and in fact, this type of uranium mining has grown considerably to be nearly half of global production over the last decade. And so I think there really is a sound argument to be made that, look, there are ways, especially in the United States, where this type of production, the in-situ recovery method, can be deployed and utilized, that there are, in fact, some very cost-effective and environmentally friendly way of mining uranium. And let's not forget that price that we pay for anything related to energy production, it's associated with all forms of energy generation. We can't afford to keep taking coal and hydrocarbons out of the Earth's crust and put in the air and create all the greenhouse gas problems that we need to address, or the sulfuric acid issues that translates to so much more human life impact that has to be addressed. And I think when you put it in perspective, the risk reward associated with effective ways of mining uranium, generating efficient, clean air, nuclear power energy generation, far outweighs the constant reliance on just burning hydrocarbons and using hydrocarbons to meet electricity needs.
Where is the demand crunch coming from? Is the U.S. leading the charge here for uranium? Because I know in the past when we spoke, the U.S. was looking to really mine all the uranium in-house here.
This is the most incredible thing, is that right now, as we speak, the United States is the largest consumer of uranium in the world. And it's consuming roughly 50 million pounds of uranium. 1 in every 5 homes in America is powered by nuclear energy. And it's the largest source of emission-free electricity in the US. Yet there's zero uranium mining in the US. Now, in the next 9 years, so out to the end of the decade, China will surpass the US to become the world's largest producer of electricity from nuclear power. And so the growth in demand is really coming from China. And when they do that, they also don't mine any uranium in China. And so both US and China, as the largest sources of nuclear energy and consumers of uranium, today have next to nothing in terms of domestic capabilities. That is really an interesting setup, and one that actually, going back to your question or your comment about politicians, politics plays a big role in this, because most of China's initiatives are all state-owned companies that are leading these initiatives. I've been very fortunate, as you know, to be able to team up with individuals like the chairman of my company, Spencer Abraham, who's a former United States Energy Secretary, to raise awareness about the fact that it is a supply chain crisis not to have uranium in the United States' own backyard, and that this is a national security issue. And guess what? Washington, D.C., after all these years of us making the case there, has recognized this. And now even the US government wants to buy physical uranium for a newly created national reserve for physical uranium.
So do you think we'll see uranium companies pop up here in the States looking for uranium here, mining uranium?
Listen, for sure, we have a situation where, again, as you said at the very beginning, when you get a 45%, 50% move in any commodity, it starts to attract attention and momentum. Back in 2005, when I formed Uranium Energy and we were a new company in the sector, there were about 40 uranium companies worldwide. By 2007, when we had a $140 uranium price, there were 600 uranium companies in the world. And so there's no doubt that I think we have a sector now, and we have a uranium price that will stimulate more development and growth, and that includes new companies perhaps emerging. But for sure, think about this. If you are an entrepreneur, or if you're thinking about starting a new mining company, and you can be in a safe jurisdiction like the US, where I am with Uranium Energy, and you can then sell uranium to utilities or the US government, who has a mandate to buy from US mined uranium sources only, that's a beautiful setup. And that, why shouldn't that encourage more companies to want to enter the US uranium industry? And that's, as you know, I've spent the last 16, almost 17 years of my life as an entrepreneur believing in this mandate, believing in this concept that the US will ultimately need to address its domestic supply chain capabilities when it comes to nuclear energy. And it starts with uranium and uranium mining. So I definitely believe in this, and I've positioned my company, Uranium Energy, for this moment and what's to come in front of us.
Because if I look at the numbers, the supply of uranium is set to fall 15% by 2025 and by 50% by 2030 due to a lack of investment in new mines. And that's why I was asking, are we going to see more exploration companies here emerge? Because those are some dire figures there.
And I think, again, said differently, and in addition to that, again, using the latest world nuclear numbers, because their projections come out once every 2 years. Last week was the latest projections. Everyone in the industry looks at that, and they called for a doubling of uranium projects to meet the expected increase in demand. And I look around and I say, we just came out of a decade-long bear market. The industry wasn't investing in replenishing resources and reserves that have just not been invested in. You know how this business works, the commodity mining business. You must be investing in development and exploration all the time. Our industry hasn't done that for a decade. And now the world is showing up and saying, well, nuclear energy is in the mix and we need uranium production to double. Okay, well, it's not going to happen that fast. And so what it means is that I believe the stage is set for stronger uranium prices and a bull market that can last long enough to stimulate the growth that is needed to meet this surging demand.
What kind of forecasts are you tracking, Amir? Where could you see the uranium price, let's say, mid-year 2022?
The game changer that I think we all have to get our head wrapped around, and the market's trying to get us head wrapped around, is the fact that in addition to supply-demand fundamentals and demand just being utilities that buy uranium, consume it to generate electricity, now you have this new investor participation in the market. It started with some hedge funds, but the notable one is the Sprott Physical Uranium Trust, a publicly listed trust that buys physical uranium, issues stock on a daily basis, and that capital must be deployed in buying physical uranium. Since they launched this initiative, they have really, I think, accelerated the rebalancing in the market. We knew the supply-demand fundamentals were sound, but you needed a spark. And that spark in the form of demand to the tune of $1.3 billion that Sprott plans to deploy to buy physical uranium. They've done about 300 million of that so far, so they got $1 billion to go. The first $300 million they've deployed buying physical uranium has moved the market 45%. So now everyone's, I think, looking at this and saying, what's going to happen to the uranium price as the next $1 billion gets deployed by the Sprott Physical Uranium Trust? And once they deploy that, they're going to be deploying more capital. And right. This is equal to what triggered the bull market of 2006, where you had the flooding of the Cigar Lake mine, which was supposed to bring 18 million pounds of production into the market, and it got delayed. Now, Sprott buying $1 billion worth of uranium is equal to about 20 million pounds of uranium of buying that's going to come into the market. So I think, to come back to your question, Daniela, the market is both fascinated and excited and unsure about where we go. How much higher does this go? Because there simply isn't enough uranium right now to meet the demand from the investors and the utilities who still.
Would you be surprised to see a doubling of the price?
Not at all. Look, if we double from these levels today, we would be back to where we were pre-Fukushima. In 2011, we were roughly around $70 per pound. Remember, the uranium price has been as high as $140 per pound. And so where we were even a month ago, it was a ridiculous price. It was below most miners' cost of production. That was not sustainable. And now, with all the need for new demand, for new supply, we have to think about what is the incentive price going to be. And that price has to be back to pre-Fukushima levels. And guess what? Demand for uranium and global energy coming from nuclear energy is back and above its pre-Fukushima levels. So that's really the fundamental way that I'm looking at it.
It's interesting. It almost reminds me of the price action of rhodium, where this price has been dormant or was dormant for so long. Right. And then all of a sudden it just took a spark and it took off. So you brought up Sprott. The other angle I want to bring up to the story is this Reddit crowd. Because if you do your research on uranium, that's one of the first things that comes up. It's caught the attention of the younger generation and the Reddit crowd, the same people who were interested in GameStop. Do you think that that's playing a role, or does that just make a good headline?
I think there's no doubt about it that when we talk about, look, I sit around the breakfast table with my 3 young kids, and when I explain to them that, and it's a fascinating documentary to watch on Netflix about Bill Gates and why he's behind nuclear energy right now. And you talk about how Elon Musk is going to power his space travel to Mars with nuclear power. Those space travel that's how space travel is done. Nuclear energy is being used by NASA. When you put it in perspective, this in terms of how nuclear energy can advance us, not only meet our clean air energy needs here in everyday use, but it really is a technology that can take us forward. When you think about it and talk about it that way, you can shake off the image problem that nuclear energy has had all along, that you and I know about, the issues at Fukushima, the issues at 3 Mile Island, over 30 years ago, have really, in a way, maybe kept this incredible technology and way of energy generation down. And there are entrepreneurs, there are billionaires today getting behind the utilization of nuclear energy to advance, really, humanity, that resonates with younger people, that resonates with my young kid when we sit around the breakfast table, talk about it. And frankly, as you know, because I'm also involved in gold, my young kids don't get nearly as excited about me telling them about the virtues of gold and why it's important for them as they do about uranium. So to come back to the Reddit comment, I'm not surprised that a younger generation of investors or people that are exchanging ideas on Reddit or other social media platforms would find the thesis and the sector interesting, especially with the various other new players and very well-known individuals that are embracing it and getting behind it.
Could a squeeze happen in the uranium space?
I think anything is possible because, again, we're talking about a tight market. Again, I draw the comparison to gold for a second because you're very familiar with it and I'm involved in gold as well. But in the gold market, in the physical gold market, we have a futures market, and there's a lot of paper contracts and trading that avoids physical delivery. In the uranium market, the physical uranium market, there is no futures market. Everything is physical settlement. And the reason why Sprott's $300 million deployed in 2 weeks has moved the market so much is that they are going for prompt deliveries when they purchase uranium. And someone has to deliver physical material to settle. There's no futures market to do a paper settlement. Can you imagine with $300 million move the gold market by 45%? It would never do that. And that's kind of frustrates me, of course, as a gold entrepreneur. But in uranium, this idea, can there be a squeeze? Structurally, it is a market. And the fact that it's all physical settlement and it is so illiquid and it doesn't have so much participation by various entities, it's a very small market. This type of buying and interest all coming in at the same time could have profound impact. Now, look, at the end of the day, I'm a long-term player, as you know. I've been at this with uranium energy for 17 years. So I'm not looking for just near-term momentum moves, but I think anything's possible given the setup.
Okay. You brought up gold, so let's wrap with that. How can I not ask you about gold since I've spoken to you about it ad nauseum in the past? What are your thoughts on gold these days, Amir? You said you're a frustrated gold entrepreneur. Are you frustrated with the price action here?
Look, I can't be frustrated with $1,750, $1,800 gold. When I was building gold mining and my gold related business there, gold was at $1,200 an ounce, and we were taking advantage of that bear market. And I think we always thought if gold got to 1,800, life would be good for gold miners. And I think you can't complain about gold at 1,800. And a lot of gold projects, especially those I'm interested in, and have come with copper as a byproduct or co-product, and copper is at $4 a pound.
Right. I
think in an environment where the monetary response to this pandemic and over the last year and a half, what has happened with the debt that has been created worldwide, the amount of printing that has taken place, I think we all would have looked at each other 3 years ago and said, if all of that happened, what do you think the gold price would do? And I think maybe everyone's a bit disappointed today is that we would have thought gold would be at $3,000 an ounce. As Bank of America, I think, actually had that called last year with this level of monetary easing. And maybe in that context, 1800 feels a little flat. And I think the equities today trading in a way that almost implies gold's at $1,300 creates a bit of a setup that just doesn't have that momentum that arguably, let's say, all of a sudden uranium now has in the last week. But look at how quickly sentiment can change. And I think the sentiment for gold, as you know, we're going into a seasonally strong period for gold and the gold price. And I think certainly, and judging by what I just witnessed recently at the Denver Gold Show where I was, where the level of participation and attendance was so low that to me was almost like a contraindicator. I think there's a fascinating setup here for gold. I'm involved, as you know, with gold mining and recently launched Gold Royalty Corp. And excited about what we're doing in the gold sector. And sometimes there's commodity price momentum, but as entrepreneurs and company builders, you're really taking a long-term approach to building these businesses and have a different perspective on the commodity.
Very good thoughts. Amir Adnani, good to be reunited with you. Thank you for joining me here on StansberryInvestor.com.
Thank you, Daniela. That was a pleasure.
And thanks for watching. We'll have much more for you. So be sure to stay tuned. In the meantime, don't forget to sign up for premier content at DanielaCambone.com. That's it for me. Thanks for watching.